Good morning, everyone, and welcome back to Wake Up Wall Street. Today, we're diving right into the heart of the market action, dissecting the mixed results that unfolded across the major indices. It was a session that left investors with a sense of uncertainty as the S&P 500 slipped down 25.3 points, marking a decline of 0.43% for the day. The Nasdaq wasn't much better, falling by 176 points, or 0.9%, weighed down significantly by the underperformance of technology stocks. It's a reminder that while the market can often feel like a roller coaster, the ride can be bumpy, especially when tech giants falter. Now, let's take a closer look at the sector performances. It was a mixed bag on Tuesday, with some sectors shining while others struggled. The energy sector emerged as the clear standout, rising 1.35%, buoyed by a continued uptick in oil prices. It seems that despite the broader market headwinds, energy continues to find its footing, reflecting perhaps a growing demand or supply constraints that are keeping prices elevated. Real estate also showed resilience, inching up 0.76%, as investors seek stability in what can often be a volatile landscape. Financials managed to post a modest gain of 0.07%, but it's clear that the heavy lifting was done by energy and real estate today. On the flip side, technology stocks continued their downward spiral, declining 1.04%. This is a trend that's been persistent, and it raises questions about the sustainability of the tech boom we've seen in recent years. Consumer discretionary stocks also took a hit, dropping 0.98%, which reflects a cautious consumer sentiment that many analysts are keeping a close eye on. Utilities, often seen as a safe haven during turbulent times, were slightly down by 0.12%, continuing their role as a defensive laggard. Turning our attention to some notable economic data releases, the Standard & Poor's House Price Index surprised on the upside, coming in at 4.2%, just above the expected 4.1%. This suggests that the housing market is showing resilience despite the pressures of higher mortgage rates. It's a glimmer of hope for those concerned about the potential for a housing downturn, as it indicates that buyers are still willing to invest in property, perhaps driven by a lack of alternatives in a volatile market. On the earnings front, Tuesday was a quiet day with no major reports to dissect. However, we did see some significant stock-specific movements that caught the market's attention. Moderna, for instance, gained 5.6%, fueled by optimism surrounding its latest product developments. The biotech sector often rides the waves of innovation, and today was no exception. Meanwhile, MicroStrategy experienced a drop of 4.4%. reflecting the ongoing volatility in cryptocurrency-linked equities. It's a stark reminder of how interconnected these markets are and how quickly sentiment can shift. Speaking of cryptocurrencies, today was a strong day for the digital asset market. Bitcoin traded at $94,800, up 1.28%, while Ethereum rose 1.15%, now sitting at $3,381. But the real standout was XRP, surging an impressive 15% to trade at $2.41. This kind of movement in the crypto space often reverberates through broader market sentiment as investors grapple with the implications of these fluctuations. In commodities, we saw a generally positive performance. Oil gained 0.52%, trading at $72.10 per barrel, while gold edged up 0.21% to reach $2,646 per ounce. Silver made a notable jump of 1.45%, now trading at $29.667 per ounce, signaling a potential flight to safety as investors look for hedges against market uncertainty. Platinum also saw a slight increase, trading at $914 per ounce. However, corn and wheat remained unchanged, while lumber held steady at $550. indicating that not all commodities are experiencing the same level of volatility. Interest rates remained relatively stable today, with the 3-month yield at 4.33%, the 10-year yield at 4.57%, and the 30-year yield at 4.78%. The 30-year fixed mortgage rate inched higher to 7.07%, which continues to put pressure on homebuyers trying to navigate the current housing market landscape. The stability in yields today may provide some comfort, but the rising mortgage rates are certainly a concern for many. The Volatility Index, or VIX, often referred to as the market's fear gauge, remained steady at 17.35. This suggests a relatively calm but cautious sentiment among investors, who seem to be holding their breath as they await further economic indicators. And speaking of indicators, keep an eye on today's upcoming data releases, particularly the unemployment claims expected at 220,000 and the final manufacturing PMI anticipated at 51.9. These figures will offer critical insights into the strength of the labour market and the overall health of the manufacturing sector. As we wrap up today's recap, it's clear that the market is navigating through a period of volatility, with declines in major indices driven by technology and consumer discretionary stocks. Yet there are bright spots in energy and real estate that provide some hope for investors. The cryptocurrency market is showing robust gains, with XRP leading the charge, while commodities like oil and silver also posted positive moves. So, stay tuned to Wake Up Wall Street for the latest updates and insights to keep you informed and ahead of market trends. Don't forget to like, subscribe, and hit that notification bell for your daily market recap. Until next time, keep your eyes on the markets, and remember, every day is a new opportunity to learn and adapt in this ever-changing landscape.